Hello, this is Peter Burgess, and today I'd like to talk to you about Forex trading strategies. For full information, please visit www.forexrebellioninfo.org www.forexrebellioninfo.org. Okay. The world of Forex trading can be an exciting and heady place to be, but there are emotional issues which you need to be aware of if you are to trade successfully. A number of different Forex technical trading strategies exist, and you need to be able to recognize which one is likely to suit you best. Whilst foreign exchange trading gurus can ably teach you about the marketplace itself, the currency pairs, the trading fundamentals, use of technical indicators, and their own particular trading systems, at the end of the day it will be up to you to decide which way is the best suited to your personality. Presently there is an enormous amount of hype surrounding Forex trading. But one of the issues which is sometimes overlooked, or in some unscrupulous cases deliberately avoided, is the emotional aspect of trading, i.e. how to deal with the two great trading killers, fear and greed. Many people are comfortable with the learning process involved to acquire the basic fundamentals of technical trading, and to learn the usage of the most common technical indicators. These same people are usually also comfortable with learning and, where possible, demo trading the particular systems being taught, whilst of course dreaming of the profits they're going to make. And these profits are there to be made, there's no doubt about that. However, many of these same people will not be aware of the emotional pressure and feelings of near panic which can be encountered when you press the button on a live trade. Therefore you need to understand the type of person you are emotionally, and what sort of trading strategy is best for you, to assure that you don't derail your trading before it's properly started. Broadly speaking, there are four main categories of Forex trading, or indeed general financial trading: intraday, intraday, scalping, and automatic trading. And we'll go through all four of these categories to discuss the advantages and pitfalls of each. Intraday traders, or end-of-day traders, place a trade on one day which will usually not close that day and may be held open for days, weeks, or in some extreme cases months. Traders who use this methodology need to be comfortable with watching the inevitable up and down swings which will accompany each trade, in the belief that the market overall will move in their particular desired direction. Often traders with this method will trade outside of their working hours. They will probably check on the position only once or twice per day, and make adjustments to stop losses at the end of each day if necessary. Quite often this requires a level of detachment which more anxious traders might not be comfortable with, and similarly quite often the initial stop losses on these kind of trades can be necessarily quite large. However, the advantage is that because you only check on the trade once per day, you are not usually tempted into rash decisions, such as closing the trade out as soon as it moves into profit. However, whilst you are likely to make bigger profits in the long term, watching a trade move 100 or even 200 points into a loss-making position before going into profit might severely test the nerves and pockets of many new traders. Intraday traders place and close trades all within the same day, and depending upon their chosen time frame, may close trades within 30 minutes to a few hours of opening. The initial stop losses tend to be less than for intraday trades, but a good level of emotional control or detachment is still required, as there will be potential swings in the market during the trade time, and a trade could, for example, make an initial profit and then fall back into a loss-making position before resuming the desired direction and go back into profit. The feelings of anguish when you decide to cut a trade short in its losing phase to minimise your loss, only wanting to turn around and make a big profit, are not great. Traders who employ this strategy are looking to make a fast kill from the market, maybe 10 to 20 points on each trade, and average trade times are often only a few minutes. They will trade the shorter time frames, 1, 3, 5 and 10 minute charts tend to be the favourites to trade here. The upside emotionally is that stop losses tend to be tight, and you do not have the same amount of anguish in the trade because it will normally only be of short duration. Many newcomers favour this method because of the limited financial and emotional exposure involved, and some use this as a confidence booster before attempting longer-term trading methods. Increasingly over the last 12 months, the market has seen the advent of automatic or robot trading packages, where with the aid of specific software, traders set parameters on their computers, and the trading robots trade automatically on their behalf 24 hours per day, 5 days per week. From an emotional standpoint, this takes the involvement and fear out of the actual trading process altogether, because you are completely hands-off. However, you are, of course, completely reliant on the particular robot trading package technology to place and manage the trades, and therefore your reliance on the effectiveness of the package itself, which for some would induce a completely different type of fear and anxiety, i.e. you're not completely in control of your money. Understanding your own emotional makeup will help to prevent you from choosing the wrong Forex trading strategy and from experiencing the fear which can be so potentially destructive to your early trading career. But if you choose the right one, you could be at the start of a whole new way of life. A great midway strategy is to use Forex Rebellion. This is a simple mechanical system which can be traded end of day or intraday to suit your working life. It's at its best on 15-minute, 1 hour, 4 hour, or even daily charts. Added to that is the advantage that it has an expert advisor plugin, which alerts you when a trade is on, but you still physically have to place the trade, and therefore you retain control. Okay, thanks very much for listening. For full details on Forex Rebellion, please go to www.forexrebellioninfo.org. That's www.forexrebellioninfo.org. This has been Peter Burgess. Thanks very much for listening.